Well, I think what's happened in the past couple of days has been a little bit of a hangover from those Friday's payrolls numbers, and in particular the sharp rise in wage growth. And that, I think, has really crystallised concerns that the Federal Reserve will embark on a much faster tightening cycle, and that's pushed bond yields up, but it's also put pressure on US stock markets. And the beginning of this week, that sell-off in the US that we saw on Friday carried over into Asia. It's carried on further into US markets on the Monday and resulted in the big sell-off that we saw yesterday evening, and then carried over again into Asia early this morning. It's been negative today. Markets are off their lows, but they have gapped significantly lower from the closes that we saw on Monday. And I think, having seen the speed of the declines, I think what this has done is it's reminded investors that ultimately markets don't always go up. I think markets have become complacent about the recent gains that we've seen in equity markets, and the declines of the last 2 or 3 days are a reminder that sometimes markets can go down and markets can become complacent, and I think these falls have shaken investors out of their complacency. There's no one single factor that's causing this particular sell-off. I think you have to look at it in the context of where we've come from over the last 2 or 3 years. We're still much higher than we were 2 or 3 years ago. We haven't really seen a significant correction in all of that time. And what we're seeing now is a number of factors starting to come together and prompt a little bit of profit taking on the part of investors. If you actually look at the economic numbers, by and large, they're fairly decent. I think there is a concern that inflationary pressures might get out of hand, and bond yields are rising. That's reducing the attractiveness of equity markets overall, because the dividend yields on equity markets, particularly US markets, are much lower than US Treasury bond yields. Well, that's the big question. I think it's too early to call the end of the falls. I think what we really need to do now over the course of the next few days is try and find a level where markets are happy to settle down. When you see the types of moves that we've seen over the past 2 or 3 days, it makes some investors a little bit cautious to dive straight back in. So I think what we're going to see now over the course of the next few days is for markets to test the top and the bottom of these new ranges, try and find a new equilibrium, and then we'll decide whether or not it's safe to come back in.